Hi, it's Lou, and welcome for another installment of our Tuesday tips, tricks, and techniques. And we have some great stuff to tell you about mortgage defaults. They are running rampant. Well, welcome, welcome. I hope you're having a fantastic Tuesday and a fantastic week. And I tell you what, it is really exciting to be in this business at this time. Whenever there's turmoil, whenever there's upset, whenever there's breakdown, whenever there's concern, you can look for opportunity. And there's big opportunity coming our way. Well, we like to start with the wins of the week, and there's definitely been some wins this over this past week since I met with you last. And we had our series on real estate being the ideal investment. Well, wins of the week are that we've had count them, properties go under contract, and pretty good contracts, one on a duplex and one on a single family home, with a developer who wants to come in and do some interesting things to that property. So we'll see. That's coming up. And, as with anything in life, during this due diligence period, things happen. So the one thing that happened was they had the termite inspection and they found termites. Uh-oh. Well, there's a surprise, right? I think actually bring it with them, but it's a joke, of course. Termite inspectors don't bring termites with them, but it's just fun. And so they did find some termites. We're going to have to deal with that. And then the other is that the appraisal came in a little bit lower than the contract price, but the people who are buying are putting a very sizable down payment, and they said, we're not worried about the appraisal because we've got enough down payment coming in that it's going to cover it, and the lender's not going to be concerned about the loan that they're making. So we're excited about that, and we'll resolve the other issues and keep moving on that. And look for opportunity right now. There's lots and lots of opportunity coming. One of the things that happened over the last week was just a wholesaler, which, by the way, when you own property, the wholesalers are after you like nobody's business, trying to get you to sell property. And sure enough, they did exactly that. They came after me, and I sent a wholesaler to look at a property. So it's just fun that when you've got properties that you can send people to, you can always see what kind of offer they're making, because right now there are some crazy offers being made. I'm just saying, and it might be to your best benefit to let some of them go right now and let some cash come in the door to be ready for the downturn, which is coming. And that was my second part of the training today. Of course, we're always open for questions, so we encourage you to put in the questions box any questions you might have on real estate, on buying, on holding real estate, property management, lease options, owner financing, the path to home ownership, certified affordable housing provider, renovations, trusts, land trusts, personal property trusts. These are things that I've been doing for over 40 years of being in this business of buying, holding, and selling property. So you have an opportunity to ask me anything you want to ask me today while we're together. But I thought it would be fun for you to look at some of the trends that are occurring in today's market, and know that these are some earmarkers for what's coming up. So I'm going to show you some slides on some current statistics and let you be the judge on whether you think that's an opportunity or not. All right, so I'm going to share that screen. Share screen, share screen. Somehow I cut it off instead of cutting it on, but that's okay.
You unshared instead of shared, Luke. So just go back
Pardon?
to the share.
Okay.
There it is.
Maybe I'm not seeing it.
And
I think it's coming through
no,
on your side. All right. Shall I go ahead and pull up the PowerPoint again?
Yep.
There we go. Okay. So I'm going to stop sharing and then reshare.
Yeah.
All right.
So bring up the PowerPoint, then share the screen, share the PowerPoint, and then go full screen.
Just doesn't seem to be showing up on my side, Scott, like it was.
Do you have the PowerPoint open?
I do.
Then you just hit the share button, share
Yep.
screen, go to window, look for PowerPoint, click on the PowerPoint, then click share.
All righty. There we go. All right. Let's see if that works. There we go. How about that? Do you see that?
Yep. There you go.
All right. So
We're in
everybody,
business.
so at our online world, welcome to technology, right? So new mindset is new result. And so getting into the mindset of this new market that we're going into, take a look at some of these statistics that will harken back to the days of old, the last downturn. And if you'll see here over on 2010, this is mortgage delinquency rates in the United States from 2000 to the fourth quarter of 2020. Now look over here at 2000, that was 4.4%. Now we go to 2010, it went to 9.3% mortgage delinquency. And then as you can see, 2012, 2013, 14, 15, 16, around 4.4% in 2018, and pretty much stabilized until it starts going up again. And that's where we are right now. So look over here. It was 9.3% in 2010 when the big bulk of the crash occurred. And sure enough, we have been hovering around 8% right now. So as we look at the crystal ball of what's happening and we look at them kicking the can down the road as they do, we see things like this. So sure enough, here's mortgage delinquency rate and unemployment rate seasonally adjusted. And look at this. You're looking at way back here in 1979, comparing unemployment to the mortgage delinquency rate. Here's what you see. You see that there's kind of a big distinction of difference in the earlier years in the 80s, but then it started to align around 2000 where unemployment and delinquency was very much related. And as you can see here in 2020, 2021, here we are at 6.38% of unemployment. And look at here, we're at 6.17% of delinquency. So there's a very big correlation on unemployment. Now, there's not a real good reason for people to be unemployed right now because there's so many jobs available. However, the government is competing with the employers out there in the world that need employees because the government has been subsidizing people's income. So as a result, they aren't really motivated to go out there and go to work, but it could be causing some of this mortgage delinquency that's going on. Now let's take a look at this FHA mortgage delinquency, and this is the percent of FHA mortgages 30 days or more delinquent. And as you can see, this is a month over month. Back in July 2019, before the COVID and all that, we were below 11%. And after COVID hit and remaining consistent to now, we're between 17 and 18% delinquency in FHA. Now, let me tell you why that's a big deal. Because I've been teaching my students for years to buy property off of the HUD home store. And that means that HUD has recaptured those properties from the lenders. They kicked in the insurance. That's what FHA is for insuring the mortgages, the difference between the 80% and the 97% that HUD allows. So that 17% differential is an insurance policy provided by the government to the lenders that are lending on these various houses and to these people. Well, sure enough, people, when they go delinquent, then they come back to the government, the lenders do, and they say, here's your collateral. Give us our money. We're kicking in the insurance. So the government takes those properties back. Now, here's what's big is since the moratorium, since the eviction moratorium, since the foreclosure moratorium, of course, what's been happening is people are hanging out in these houses and they are not making payment. As you can see, between 17 and 18% right now in delinquency. What does that mean? That means that a whole lot of people are way far behind. And that means a huge, incredible backlog of FHA homes. So what we'll see is when FHA does go ahead and foreclose on these properties, and they do go ahead and evict these folks, which could be a year down the road. It could be significantly down the road. However, it's important to note this because that means there's a lot of inventory coming. And whenever there's a dearth or a huge drop of inventory onto the marketplace, what does that do? That drives prices down. That gives us huge opportunity coming our way. And here's another one to take a look at. The 10 metros most threatened by FHA delinquency rates. And what do we see right here in Atlanta, where I'm located? Over 50,000 delinquent loans. Over 20% of the loans in the marketplace that are FHA-backed loans are delinquent. 14.5% are serious delinquent. And the share of the overall market by FHA is 21% of the market. So as you see here in the Houston area, that's 15.9% are serious delinquent. Chicago, 14.9%. Dallas, 12.9%. Washington, Arlington, DC, the DMV area, 15.7%. We've got Riverside, San Bernardino, California, 11.9% delinquency. California. Yeah, I said California. Look at that. And then we got in an adjoining area of the DMV in Maryland, 14.1%. You've got San Antonio, Texas. Now, this is 3 Texas cities now. Large metro areas, 13% delinquency. Oh, and then here comes Florida. Orlando, 13.8%. Tampa, St. Petersburg, 11.9%. So that means some inventory coming in certain markets in the country, and it's something that you definitely want to watch as we look forward to the new market coming. Now, so people ask me, does that mean, Lou, that you're not buying property? No, that doesn't mean that. That means, listen, go back to what I teach you about the house monster. The house monster is find your buyer before you buy. If you've got a buyer, they've got a down payment, they can afford the monthly, you've got no reason not to buy a property for them that you can buy right and buy cheap, like I teach. So we've got that coming for you. And know that, hey, we've got some opportunity coming, and this is the market. This is the opportunity that's coming your way. So I teach you about the target market and all the other good stuff. In fact, I'm going to be doing some of this at the upcoming Millionaire Jumpstart. So we're going to be looking forward to definitely helping you in your overall strategy in your real estate business coming up in the new opportunity that we've got. And I want to remind you that you can ask questions. So that's what we're here for, to give you the opportunity to advance your real estate business while we're together. Hopefully that was some eye-openers for you about the numbers that are happening out there right now. Now is the time to get educated. Now is the time to get inspired. Now is the time to get ready for the upcoming market. I've got good news for you. We've got an upcoming event for that. Now, this upcoming event is coming next weekend, not this coming weekend, but the following weekend. We're going to be in Pittsburgh, Pennsylvania, and we are so excited about that. First of all, it's a beautiful city. There's so much to see there. Secondly, there are some fantastic people there. We've got a number of our certified affordable housing providers in the Pittsburgh area. We're so excited to be seeing them. We're bringing our game to them instead of them having to come to us. And we're inviting all of you to come and join us as well. Now, this is a Millionaire Jumpstart. This is a 3-day event, and this is where I cover our business model from soup to nuts with a heavy dose towards buying right and buying cheap, buying the way we do, making the presentation, the cost to sell worksheet, and the unique ways that we buy, and how we raise our money from private money sources, not going to banks, not qualifying for loans, teaching you how the seller can be the bank on the purchase of the property, and then going through that cost to sell worksheet with your seller to show them how you can pay really good for their property when they are the bank. So you can make them a cash offer, you can make them a finance offer. In fact, I'm going to teach you how to make at least 3 offers. I'm going to teach you the automated way to have your business operate 24/7, 365. I'm going to teach you about holding properties long term and some techniques and tricks that we use to generate about 25 additional profit centers over and above what a traditional landlord gets, and all being of service to our clients. So bringing more service to the table for the clients brings more money to your pocket, more income, more residual income, which I'm a big believer in residual income. If you love the idea of having a residual income business that pays you for the rest of your life, then you definitely want to get to Millionaire Jumpstart. And oh, by the way, I'm going to be teaching you about trusts, the profits, the protection, the privacy, and the probate avoidance that comes with trusts, land trusts and personal property trusts. I happen to think they're one of the very best entities on the planet. I do believe that trusts are the best entity on the planet, and it's something that most people don't know about, including attorneys and a lot of financial planners as well. So we encourage you to come and learn it directly, learn it so that you can implement it. Now, one of the great things that I'm going to be giving you is a marvelous, incredible manual that is chock full of some of my best documents and forms. I'm known as the forms guy, so definitely you're going to be getting some of my best stuff, and we're going to be going through this together in class. Now go to millionairejumpstart.com for the special price, the special offer that we're giving you. I want to encourage you to become a VIP. The VIPs get the best seating, and they get a whole bunch of goodies, including dinner with Lou one night, where I'm going to take all the group of VIPs to dinner. And there's a special certificate in there for a one-on-one with good old Lou at any time you choose, before the event, during the event, after the event, anytime that you got a deal in the pipeline and you say, wonder what Lou would do, you got a certificate you can use to take advantage of that. Now that's $500 value right there in that half an hour. So just know that our time is very valuable, and we've been able to help a lot of people in those private consultations. So definitely take advantage of the VIP. And we got 2 offers. We've got the VIP seating, and we've got the general admission seating, anywhere from $99 to $496, depending on what your budget is and what you'd like to do. We would love to see you live and in person at the event. We're going to be there. Why shouldn't you? You're definitely going to be there in the midst of some really great and powerful people. I know personally several multi-millionaires that will be there. You will be meeting them. They have built businesses using the Street Smart system. They are coming back for a recharge, a reminder, a refresher, and you're going to be able to meet them live and in person. So definitely get there in person if you possibly can. And that's going to be August 27, 28, 29 in Pittsburgh, Pennsylvania. So I am looking forward to seeing you personally there. Hopefully you can take advantage of that. Well, I think Scott pulled up the wrong one because that's the Vegas event that's already passed. Scott, you got to get your act together there, man. You're putting up the wrong thing. So, no, the event that's coming up is Pittsburgh, Pennsylvania, and that is August 27, 28, and 29. Now, let's see here. What else did I want to do? I wanted to cover some questions that you have for your real estate business, and maybe some questions about the trends that I see and where my crystal ball leads us as we go forward in our journey on real estate, buying right, buying cheap.
Yeah, sorry about that, Lou. I didn't realize I had the place on that particular video. And so, yeah, Pittsburgh, Pennsylvania. Helga had an interesting question. Should you be saving your money for the fall in the prices, or should we be going full steam ahead right now?
Helga, that's a great question, and definitely the idea is not to get stopped, not to stop and wait. The idea is to use your house monster to bring in customers. They come in nonstop. It's one of the reasons I created the house monster, because back in the last downturn, when everything crashed and burned, I was left with a dozen properties that I had bought right, I had bought cheap, I had fixed them up beautifully, we had them on the market. People were raising their hand, they were putting contracts in, they said, I want to buy, I want to buy, I want to buy. And the bank said, no, 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 we're closed today. We're not giving any money today. We're not approving any mortgages now. So all of a sudden I got stuck with those properties. Well, I flipped the script and started offering those on my Path to Home Ownership program. And that was the game changer for us. So definitely the game changer is to find your buyer before you buy. So as a result of already having a customer, you already know they have down payment money, that you know what they can afford on a monthly basis, you know what their credit looks like, you know what kind of program you can offer to them. Now we can go about finding and buying a property for that person. Literally, as a principal, we purchase the property and we put our customer into the property. Now that we have the best of both worlds, right? They don't care how much money you're making on the deal. They care if they can afford it. So your job is to get that customer. Your job is then to go buy a house for them. And we don't have to wait for the downturn in the market, because there's deals out there all the time. And that's one of the things that I teach you at Millionaire Jumpstart, is we literally have a presentation process that we do with our customers. And in fact, one of the things that I teach you at Jumpstart is that we have this magical thing called a cost to sell worksheet. Now, this cost to sell worksheet, this is what we do with our customer. So our customer sees exactly, and in fact participates in coming up with the bottom line offer price on the property. So when we come up with this bottom line offer, the seller sees exactly how we got there. If that number works for them, great, we buy the property. And if that number does not work for them, great, we have another offer we can make. And so as a result of what we do and how we do it, we're able to justify a price, and we're also able to justify an increase in our offer with the seller being a participant in the deal. So I'm going to be teaching, in fact, this is one of the exercises that we do in class at Millionaire Jumpstart. We're actually going to be filling this out together, so you'll see exactly how to do that when you're live and in person with a seller. Great question. Thank you.
We've had a few people ask, is if we get started now, then what you're saying is when the all these foreclosures and everything starts happening, we're going to be prepared.
Yeah, exactly right. We're going to, I don't, I called it flattening the real estate curve for a while there because they were talking about we're going to shut the whole country down and flatten the curve on all these people coming into the hospital, and they just never woke back up. But our approach to the business is flattening the real estate curve. So I really don't care when or if the market crashes. That's really not a concern to me. Why? Because I do things differently. I go find, instead of having an inventory of houses, I have an inventory of customers. That's the key, an inventory of customers that we serve. And while we're serving those folks, we're finding a property that fits with exactly their situation. And there's a profit in there and there's safety in there. So regardless of what the market does, we've already got a safe way that we can earn money and not have to worry about when or if the market crashes.
Awesome, Lou. So that's the end of the questions that we've got.
Great.
Do you want to talk maybe about some of the people that have come to a Millionaire Jumpstart and the successes that they've had?
Well, we've had some great successes. This past Sunday night, we had a case study, and every few weeks, I select one of our students that has told me about deals that they've worked recently, and we have a case study. So we had a couple from Houston, Texas. We had Lily and Eric Cooper, and they shared with us some amazing things that are happening in their world and a couple of deals that have happened very recently. But it was so cool because one of the houses was a great example of how our system works, where they already had their buyer lined up, and then they found a house. They had been working on this house for quite some time, and the deal finally came through, and they're making about $80,000 on that deal. So $60,000 on that deal. It's a huge, nice markup on that. And they already had a customer to go into that property. And then another example they gave was a mobile home that they found using their marketing and the power of connectivity in our path to home ownership plan. They were actually able to resource and find a property that they could buy really cheap. It was a mobile home. The people paid $76,000 for it, and they were able to buy that property for $15,000. They actually chose to go ahead and relocate it to Texas to a park that was close to them. And so they spent about another $10,000 relocating it. Well, still they only have 25 grand in it, and they were able to sell it to their new buyer for $150,000. So there's a huge markup in that deal. And that's the key, is finding buyers that can afford what you've got. And they've got an option to buy that property at some time in the future. So everything is great for the buyer as well, because they've got an opportunity to improve their lives in an affordable way, not setting people up for failure, but setting people up for success. So that was a great example of a traditional single family home as well as a mobile home, and how the path to home ownership works on all of those. And they gave a great story on that. So those of you who are licensee of the Street Smart system, we have that available for your archive of the Sunday night calls on your replay web class link. And so as a result, you'll be able to go there and listen to that one. And there's a bunch of them there from different folks that are doing exactly what I teach how to do. And many of them have now become millionaires and even multimillionaires because of following the system the way the system is designed to go. Of course, you have to hear it a few times to really adopt it and understand it fully. So I commend Eric and Lily, because they've only been with us for a year and a half. He shared only a year and a half, and they have now done 15 deals. So almost a house a month since they joined us, and been making marvelous markups on every one of the properties, as well as building an amazing cash flow. So imagine starting, and a year and a half from now, having 15 different cash flowing properties every month. pumping in that residual income and having some great assets and equity to rely on for retirement purposes. So just think about that as you're setting yourself up for your future, and you're thinking about what you're going to do, not this coming weekend, but the weekend after that. Come to Millionaire Jumpstart, because that's exactly where they got started with me just a year and a half ago.
All right. So time to wrap it up, Lou. Any last words of wisdom?
Well, I tell you, now is such a great time to be in this business. You may have heard me say that before, but it's just so true. Everywhere I look, I see opportunity. Janice was telling me that one of the properties that we have on our Path to Homeownership program, she put it up on one of our members, actually, that's one of our Path to Homeownership members, actually fell through on being able to take that property. She put it out on the Facebook marketplace with our program. Oh my gosh, she got 41 leads within hours of putting it out there. So it's just amazing how much is available out there now, and how hot the market is, how much people are predisposed to our transactions, what we do. I've told you before that we are not doing any rentals right now. We're only doing rent to own, owner finance, or cash sale. And sure enough, there's plenty of customers out there with significant down payments. Much better customer, right, when they've got more skin in the game. So it's something I encourage all of you to take a look at in your own portfolios, that there's an opportunity that exists that you may not be taking advantage of. So definitely I would get brushed up on those techniques. My volume 9, lease options, my volume 10, owner financing, part of the overall strategy that we do on our Path to Homeownership. Definitely get brushed up on those things and start offering your properties that way. But don't wait. Go ahead and get customers in the pipeline now, even if you don't have any vacancies, because those customers can cause you to go out there and find some more properties when you've got a nice customer with a nice fat down payment. We're working with one right now with $20,000 down, another one with $30,000 down, another one with, believe it or not, $200,000 down. So there's lots of people out there that do have down payment money that cannot qualify for loans at a traditional lender. They do have money, they do have income, but the traditional lenders will not serve them. So that's a huge opportunity for each and every one of you to take advantage of. So that would be my advice of the week, is get out there and take advantage of this great market that we are in right now.
Yeah, baby.
Yeah, baby. That